Thank you for joining us today. Affiliated Advisors here to speak to you about nursing home worries, and long-term care insurance may help with that. I'm Lori Skibo. I'm super happy to be here with you today to speak to you about the aging concerns that so many of us are concerned with. I'm going to offer you some solutions, some planning tips, and that will hopefully make you and your clients sleep easy tonight. First, I want to give you a little bit of background on Affiliated Advisors. Our mission is to help advisors build businesses of their dreams while still serving clients with integrity, creativity, and compassion. So considering that our current quarantine state that we all find ourselves in today is due to the recent COVID-19 crisis, I felt it was really important that we take an opportunity to speak to our advisors and have a frank discussion as how it directly is relating to our senior population and specifically even more nursing home care. You know, there were already concerns about the level of care across our country in nursing home facilities, even before COVID. Now, considering that at least 1/3 of all of the deaths happened in nursing homes, makes us all really rethink about what we want for ourselves or for our loved ones and for our clients. As you know, as we process into the aging process ourselves and find ourselves in retirement. It brought national attention to the many vulnerabilities that our seniors are currently facing today, but it also highlighted the fact that so many Americans actually prefer to remain in their own home and receive care and protection and security around their family and their loved ones. So that's why we're here today. We can show you ways that you can help your clients do just that. Before I dive into the many solutions that I'm going to talk to you about today, we got to understand a lot of the problems. You know, we go through all stages of life. You know, all of our clients hopefully have worked really, really hard and probably have put away a little bit of accumulation and savings. You know, we ask them to save for their college funding. You know, we speak to them about their retirement plans. We brief them on ways to preserve and protect the estates that we've worked so hard to help them build. But outside of the financial worries, clients also worry about things like what will happen when I age, you know, how and who will provide for me, not just financially, but independently too. How will we help them remain living in their own homes and living independently for as long as possible? So beyond the financial worries, there just are a lot of emotional concerns that we need as advisors that we need to take into account too. I should include that when I speak over long-term care planning and long-term care insurance, I also include what I call longevity planning. Lori, what's the difference between longevity planning and financial planning? You know, think of it kind of like building your new custom home. Retirement planning is just the financial process. Banker's job, right? Like, banker job is to take us through the loan application process and secure whatever financing that we need in order to build our dream. It's solely focused on the financing, but longevity planning actually focuses on the action steps, more like an architect would. You know, it's the architect's job to help their clients think through the logistics of setting up the floor plan that is going to work best for their family. So for example, where does one put the kitchen sink in relation to the refrigerator as not to cause a traffic jam in the heart of the home, the kitchen? So longevity planning acts in a lot of ways just like that. You want to be sure your client's financial plans aren't just solely focused on the dollars that they built or accumulated within it, but you also want to help them decide on how they should be allocating those dollars to help them live the way that they intended. There was a survey conducted, and it actually showed that clients were 5 times more concerned about becoming a burden to their children than they were about actually dying. They expressed concerns about how living with an adult child would impact their marriages and the family dynamic. They worried about sibling relationships. We know that those can add undue stress, can add a lot of disagreements and arguments within the family. They talked about building the castle, and that they worried that this family structure that was living in it might collapse under the undue stress or without thoughtful execution of the plan. What was really interesting to me, though, was that they even understood that specifically how this issue impacts our daughters. We are increasingly hearing concerns about how our daughters are just more likely to bear the heavy burdens as our parents age. There's an industry joke that the best long-term care insurance plan is that of a conscientious daughter. It's actually not a laughing matter because there's a lot of truth behind that. I was surprised to read that a very prominent and influential woman who was offered and honored with a very high level appointment within our federal government. It's her dream job, and upon being offered with it, she hesitated. She didn't hesitate because she didn't think she could do the job. She knew she was the right person for the job. But she hesitated because her father had just had a stroke. And she wasn't sure she could do both jobs. In particular, this individual had plenty of financial resources. There were no cash flow concerns. She could afford to have paid, the best professional caregivers that money could buy. But she was also wise enough to understand that she also had to act as the quarterback. Like, she had to be the person that understood the nuances of, who was coming into the home between the night shift and the day shift, and coordinating the aides that come in to help, and who got paid and which bills haven't been paid, and the technology that kind of surrounds a lot of taking care of someone who can't take care of themselves. I mean, that's a full-time in and of itself. So when we're looking at the statistics, this issue impacts women 7 times more likely than anybody else. They're more likely to have to cut back to a part-time job, take leave of absence, or possibly even have to quit their full-time employment in order to stay home and take care of a loved one. So when we talk about longevity planning, we're talking about, it's just not the financial protection, it's also about the family protection too. Knowing how impactful proper longevity and retirement planning is, why do so many clients avoid it? I hear feedback from both clients and advisors, actually, how overwhelmed they are with all of the various options and the products. They seem complex and hard to understand. But also, too, just try to sit back and think about what the aging process is actually going to look and feel like to us all. It sounds overwhelming to me now, and I'm the one doing the presentation on the subject matter. But what if I was able to reframe that for you? What if I was able to tell you that there's an upside, and the upside is that life expectancies are increasing because of the advancement of medical technologies, and the healthier lifestyles that most of us enjoy today. So a longer life changes everything, especially retirement. Unlike past generations, our retirement is likely to represent 1/3 of our lives. So, we should tend to focus not just on the gloom and the doom aspects of proper planning when we're sitting with our clients, but we should also put a little bit of thought and time behind what they're actually going to do with this increased longevity that they're most likely going to experience. The COVID crisis kind of acted a little bit like a fire drill for a lot of us, didn't it? How many of us couldn't remember if it was Monday or Tuesday? Time just seemed to kind of drag on. But now that we've all had a little taste of what retirement must look and feel like, we should be asking our clients, really, what are they going to want to do with the next 1/3 of their lives? When we reshape these conversations and discussions with our clients, it becomes just a different, more holistic approach to the entire planning process. I know that the biggest reason that so many of us and our clients fear actually looking into long-term care is and having the conversations regard it is because they haven't properly funded for their long-term care. It's because of the financial realities of it. It's expensive, right? People tell me the statistics are just too scary to think about, and they can be. I'm going to throw one at you right here. 70% of us will need, at 65 or older, will need some type of assistance in our lifespan. So, what does that actually mean in dollars? And here we go. It means that on average, about $100,000 a year in an institutional nursing home. That's probably somewhere that you never really wanted to end up to begin with. On average, it's about $45,000 for some type of assisted living. And even staying at home isn't going to be free. You can expect, if you want to obtain care from some type of professional aid or nursing outside of just your family having to bear all of the work that and the heavy lifting that goes around it, it's going to be about $50,000. So people see how much it costs, and they start to believe that they can't properly plan for it. But that isn't true. You can and you should, and let me show you why. When people think about getting older, many of us think about things like Medicare and Medicaid, but how much government assistance do we really think our government's going to give us to cover benefits of long-term care? The idea that Medicare is going to pay for long-term care benefits is a myth. It just isn't. And either is their personal health insurance plan. They just aren't going to cover the cost of any long-term care benefits. So if your clients have accumulated anything over $2,000 of assets, we all know they're never going to qualify for Medicaid. That's going to leave us with two options. They can either self-fund their plan, or they can take out some type of long-term care insurance plan that's going to help mitigate some of that risk for future years. Here's the good news about insurance plans. You can spend a little today, but you gain so much more. Your clients are really ensuring, their freedom to make decisions for themselves later in life. They are ensuring their independence. And for so many of our elders today who are living independently during this crisis, a lot of them probably unknowingly kind of insured their own lives. So some questions of how does LTC work that clients typically will come up with. how do I know if long-term care insurance is even a possibility for me? And these are some things that you should consider as their advisor. You know, typically there's a health assessment. There's some medical and health component to the underwriting process, Lee. Generally speaking, the younger and the healthier that they are, the lower the costs. And later in life, if they buy a policy, the costs go up. And sometimes based on their health, they might not be able to qualify for any type of long-term care in the future based on health issues. But what you should know as their advisor is that there are new simplified underwriting products that would help speed up the process and make it easier for individuals, even with some type of complicated health history in the past, that they still might qualify for coverage. Premium flexibility. There are so many ways that you can help your clients fund these types of plans. You know, many times a lot of our clients think of these plans as an ongoing annual premium that they have to contribute into forever, but not always. There are so many creative different ways that you can actually help them fund the plan. I'll give you an example. I had an individual who had an old cash value life assurance policy that he had purchased on himself when he was much younger, early 30s. You know, he'd bought the life insurance policy just to offset any type of risk had he died prematurely. You know, but now he was going into retirement. His kids were grown. There's no mortgage on his house any longer. And he just really didn't need the death component of the life insurance plan that he had purchased so many years ago. So what we were able to do was structure the plan in a way that we transferred the existing cash value out of the insurance policy and into a new long-term care policy. Benefit of this was that not only did he have the protection for himself, because we know when we're doing any type of transfer or 1035 from policy to policy, it has to go like for like, meaning that the insureds have to be like for like too, right? The way that we were able to structure this was that we were not only get him coverage, but we could also use that pool of money to cover his wife. So that was a huge benefit in that type of planning for him. You know, so just understand that there are just a lot of different ways financial advisors can help their clients with all types of different funding options. A term that most of you obviously have heard before is ADL, which stands for Activity of Daily Living. You know, there are 6 ADLs: eating, bathing, dressing, toileting, driving and transferring, moving from one place to another, and continence. All this means is if your clients can't do 2 out of the 6, then they're eligible to actually go on claim and start receiving their monthly benefit. But what if your client never goes on claim? What if he or she actually is one of the lucky ones in the 30th percentile that never end up needing long-term care? There are now ways that you can help them invest into certain contracts that you could structure in ways like they could get a full refund of their premium. Everything they put in, plus a little interest, they could actually cash out and get it all back if they wanted to. Another way that you can structure it is that applying for a death benefit component. So let's say they never need it and they end up dying first. The death benefit and the investment that they put into it actually gets paid out tax-free to their client or to their beneficiaries. So, I mean, there's just, again, an effort to keep it simple today. Just know that there are so many ways that long-term care can be personally designed and tailored to fit, you know, your client's family and your their family situation. So these are the 4 types of options of health, of type of care that long-term care plans typically provide. But what I want you to know today is that these options are not all plans pay out the benefits in the same way. You know, what I mean by that is the older plans that, you know, have been enforced and on the books for quite a while now, you probably have sold them in the past or know someone who actually owns them. Typically, won't cover the home care expenses, or if they do, generally at a reduced rate, or very limited in benefit. You know, many plans today typically had focused on institutional care. You know, as we get older, like we were just going to go off into the sunset and go retire in this nursing home somewhere. And it's just not how we think today, especially after the COVID crisis. There are new ways, there are better ways that allows our clients the flexibility to use the benefit in the way that they want to, not the way the insurance carrier stipulates who and when and how they are paid. Our clients can make those decisions for themselves now. Do they want to stay in their own home? You know, if that's important to them, then they need to invest into a plan that's going to maximize the home health care benefit so that you have flexibility to pay for things like if they want to redo their master bathroom in order to make it handicapped accessible. You know, their floor plans may have changed, and you know, you can, with the right type of planning, make sure that those types of services are covered. So in order to make sure your clients are investing into the type of plan that they really want, meaning the actual benefits are paid benefits that they really wanted, you know, you have to have a beginning discussion. These are some questions that I typically start with. How much do you need? How long could you wait? How long will you need it for? And is inflation going to be a problem? You know, and the answers really are found in the complete and total financial plan that you've already been working on with your clients. As their financial advisor, you're going to be able to make recommendations such as Bob or Amy. You know, you don't have to wait very long. Like you don't need a plan that the benefit kicks in on day one. You have enough assets in your 401k or your IRA that would offset whatever insurance or whatever planning that you would need for X amount of days. You know, we want to protect you, but we don't want you to overpay for services you don't need either. So the questions are totally unique and customizable to them and their family. But now, more than ever, it's really a good time to take a hard look at their entire picture and what that looks like to your clients, you know, before your clients, you know, find themselves or someone that they love locked behind a door that they never really wanted to be behind to begin with. So with that, I want to thank you again for joining me. I'm Lori Skibo, Director of Insurance here at Affiliated Advisor. My phone number, 248-410-7300, or you can email me at lori@affiliatedadvisors.com. And for more information on Affiliated Advisors, go to our website, www.affiliatedadvisors.com. Thanks for joining.